Hi guys, this is Rufus Kamau here with yet another episode of the Bullish Banter podcast. I'm joined with my co-host Jesse as we discuss the current events in the markets with a key focus on electric vehicles production, consumption, and the key trends to expect going forward. So on this episode, we have covered quite depth from the supply chains affecting the EV production, the outlook for ICE use across the world, and hopefully you get to enjoy and benefit from this podcast. And if you like it, make sure to subscribe to the channel, subscribe to our social media handles, and make sure to register for an account from the links provided below. Enjoy.
Hey guys, I hope you are enjoying your afternoon. Fellow traders, I hope as well your February has been productive, educative, and more importantly, profitable. My name is Jesse. I'm joined by my usual co-host of the Bullish Banter episode, Rufus.
Hi, how are you doing?
I'm good. How's your February been?
February is awesome. I think it ended real fast.
Really?
Yeah, just the other day we were celebrating Valentine's. Today is 28.
Valentine's is 2 weeks in the middle of February.
Yeah.
Okay. Nice. In terms of the market, what has been your, overview?
Well, the key highlight is the current extension of the Nasdaq rally from last year.
Okay.
So it seems like the AI boom is continuing this year, and it was quite surprising that we thought that the market had topped. We'd see some form of pullback or correction, but there seems to be no end into this rally. Okay. Besides that, I think the other key news is the Bitcoin rally, having broken $57,000 per Bitcoin yesterday. I think it's gaining quite a momentum, especially after the approval of the ETFs.
Okay. Yeah. Interesting. Do you see it maybe, the problem with it is that when it hits all-time highs, it tends to, attract more people, and that attraction might cause maybe new liquidity. Do you think that will be the effect of such a rally and price action?
Well, there's on one side, the former traders, the guys who have the fear of missing out, basically going in real fast to join the current rally.
Okay.
But also there's the short squeeze. The guys who were very short around 50, 55K. And then the ones who already have shorts around 69K. Yeah. If those guys get kicked or forced to cover, then it could potentially lead to a much stronger rally.
Interesting. Just to stay on that before we jump into today's topic, there were two, I think, major news which came out this week. Number one is, I think it is Senator Ted Cruz, and the Republicans are trying to bring some, legislation to sort of block creation of central bank digital currencies in the US. And also there was concern that Bitcoin mining is really bringing bringing a lot of load on the grid due to its electricity consumption. And also a third point was, I think, the ETF, was it BlackRock, hit almost 1 billion. Is it 1 billion or $1 trillion in volumes traded? I'll have to check on that and at least clarify next time. Do you think that ETF had a positive impact on its price action?
Well, to begin with, when the ETF news were announced, there was this feature or scenario in the Bitcoin market where a lot of participants in the market had bought the rumor. Then when the news were confirmed, there was a lot of selling pressure and prices really went down in December. But then the recovery we have seen from that, especially in January and February, it seems like that news wasn't fully priced in. So a lot of ETFs, after they got the approval, they have been buying 1, 2, 3, and this has really gone up to 10 times the amount that Bitcoin miners are adding to the system. So as a result, there is a significantly high demand compared to supply of Bitcoin. And as a result, we are seeing the price moving really high.
Interesting.
So the ETF volumes are really a key driver.
Okay.
But now, as we approach April, the estimated month for Bitcoin halving, there is expected to be even lower supply of Bitcoin. And as a result, we could be seeing price making a big, very high.
Do you think maybe people will sort of, buy the rumor and then sell the news?
Well,
because the rumor is it's more or less a conversation going out there.
Yeah.
So now with the rally going up, maybe it might correct at that time, and then maybe later on, in the year, typically as it happens in the stock market.
So buy the rumor, sell the news works in a scenario where the news outcome is not guaranteed.
Okay.
So, for instance, the ETF approval, we only had probabilities. We didn't know whether they would actually get approved.
Okay.
So, Bitcoin halving is a certainty. It's written in code.
Okay.
So everyone knows that once the halving happens, then the number of blocks mined by miners will be halved down.
Okay.
So there will be guaranteed low supply of Bitcoin. So as long as demand keeps rising, there's a significantly high chance that this will lead to a price acceleration.
Staying with demand and electricity, I don't know if you watch the local news, and I know for FX Pesa clans come from all over the, Africa globe or something like that, yeah? Recently, Tanzania are testing their electric train.
Yeah.
And of course, at test, you'd expect it not to be perfect, smooth ride. And of course, East Africa is going bit due to FDIs, foreign direct investment in manufacturing, population demand of electricity use from various things, be it homework, hybrid working, home and in office, or just population access to smartphone and high consuming gadgets. Do you think that will be a game changer, at least in transportation, at least in challenging, the neighbor? Because if you see your neighbor bought a new car and you have your 1992 Toyota, you will want to even get not that old, but at least upgrade it. Do you think that will have an impact on infrastructure in Africa in regards to relying on energy supply from electricity as opposed to fossil fuel?
Well, I would say right now as we speak, energy supply in Africa is really low, and that's limiting Africa's development.
Okay.
So a lot of companies out there, especially in the Western and Eastern Asian countries, you realize that they are really interested in moving their production to Africa, but some of the key headwinds that they face is high energy cost. So energy is really expensive in Kenya, and if you look at Tanzania, if you look at Ethiopia, if you look at Uganda, all of them, they have significantly high energy prices. So one of the reasons is because the supply versus demand has an imbalance. The supply is lower compared to demand. And we are a young continent with a very fast population growth. So that's a key challenge, especially for EV companies. So all the startups that have, let's say, entered Kenya in terms of EV cars, they have faced significant challenges with energy costs rising higher and higher, and eventually some of them have exited the market. So having low-cost energy as well as charging infrastructure is very important for EV adoption. But then for Tanzania, I would say it was quite expected. So once you implement an electric train in Tanzania, you face those early adoption challenges.
Okay.
So in Kenya, we have never faced that because we have never implemented an electric train. So once Tanzania figures things out and perhaps even secures some form of low energy production for the train, then there's a good chance that they will be over that headwind. And in a short duration, we could start seeing the train performing really well.
Interesting. Today we're talking about, the EV market, electronic vehicle market, and one of the biggest companies that have really drove the investment, reason or case for electronic vehicle has been Tesla's performance over the last at least 9-10 years. I think it was almost 4 years ago when Tesla almost hit, I think it was $900 a share before they did a stock split, and they were the talk of the town. Tesla had this cult like the the iOS owners, whereby you believe it is the best of its class, the most convenient. I think what their philosophy is trying to make Tesla one of the fastest charging electric cars, but also easy to maintain and service. And more importantly, it can go anywhere, especially the recent launch of Cybertruck. But also, I think almost 3 years after the COVID, I think it was quite important or quite, feasible, while inflation was low, consumer expenditure in terms of surplus income was high. But after COVID, people have burnt through their savings. Inflation went up to 9%, at least in the US, and globally in general, up to like around 5%. There has been, I think, almost 3 or 4 times Tesla have cut their prices down just to fit in. And there was the other side of it, I think, where now I believe created that mania or hype. There were a lot of incentives in the electric rather, either be it supply chain, production, adoption, and manufacturing. But right now, if you look at the numbers, Tesla is really doing okay, not doing above the top. Consumers are not they are not buying it as main use, they are buying it maybe as a second car. What is your view on it? Because I know for you, climate change is not really the best of subjects, at least for now.
Well, I would say Tesla has faced many challenges. One of them is the reduction of EV credits that it was getting from the US government as a result of providing environmentally friendly cars.
Okay.
So that was a big hit, happened in January. Then late last year, the competition with BYD in Tesla's biggest market, which is the Chinese economy, there's a lot of competition with these EV companies in China producing electric cars at much lower costs. So that led to Tesla being really concerned and started cutting prices. And as a result, it affected the company's profitability. However, deliveries for Tesla came out as expected, and they are continuing to ramp up production, especially after they added more production in India. So I don't think demand for Tesla cars will slow down this year. But then in terms of compounded annual growth rate over the next couple of years, now people are beginning to question that. So one of the key developments I saw over the last 1 month was this announcement by the Toyota CEO, basically saying that they were looking to push EV adoption 100%, that is Toyota to move to EV production 100%. But then after studying the market, he realized that there were 2 key things that were quite a problem. The first problem that the Toyota CEO identified was that the world is not yet ready to implement infrastructure that would support EV charging globally. So for Toyota, they are not limited to the Japanese market. They have quite a huge dominance across the world. So they saw that that is not being implemented at the same rate that they would like to go fully EV. So they saw that there was still a very strong dominance of the internal combustion engines within the global market. So the second problem he saw, and this is concerning the way government policies have been implemented, especially through the West. So the West has been promoting this net zero policy in order to reduce emissions, and in so doing, they brought in the carbon credits and so on. So the governments have been pushing for EV adoption. The climate policy activists have also been pushing for the same. But the final decision lies with the consumer. So it's the consumer demand that will determine the EV adoption, not the other way around, that is forced or imposed by policymakers.
Okay.
So from his observation, there's a very strong connection with ICE engines. So a lot of people have grown accustomed to driving ICE vehicles. So the rumble, the fueling and everything, there's a whole lot of infrastructure that has been implemented, including marketing, petrol stations and so on, that are already existing and working just as fine. Until people see an advantage of moving to an EV, they will still consider holding on to their existing ICE vehicles or the existing demand.
There was this, I think it was Ford Raptor, which I think they made it for at least maybe 2 or 3 years before, I think in the last earnings call, they announced that they are, cutting it off. And also just yesterday, that would be on 27th of February, for those who are listening, Apple announced its plan to, to not proceed with their Apple car design. Is that a sign? Because for them, they were projecting a price of around $100,000 just to get that car. Is that a sign that maybe if I think Tesla Model Y, which is selling for around $40,000, people are not getting it. Instead, they are going for the ICE, maybe something like 2024 Subaru, 2024 Toyotas, 2024 or 2023, something like Volkswagen or even Mercedes ICE. Because not only are they sort of with the eco mode or the advantage or the choice of switching in between. And if you look at the margins, is it that they have looked at it as a way of, yes, we can get into this business, but how to make that battery reliable to serve these customers without worrying, and more importantly, the charging time. Because you find for you to do it a full charge, you need at least an hour. Well, if you go to a gas station or a petrol station, within 30 minutes, you have your full tank, you have washed your windscreen, and you're good to go. Is that part consumers looking at that and they're like, if I'm going to an 8-hour journey and I have to wait for another 8 hour, I might as well, go back to another type of vehicle. Is that consumer behavior part of the reason why EVs are not doing so well? Because like I said, most people are getting Raptors as second or third car, not their day-to-day use. And if you're not looking to use it day-to-day, that means reliability is an issue. And everyone, even when one part of the tick boxes when people are going to purchase a car is how reliable is it, and how long will it serve me before I start worrying about looking for a service garage or something like that?
Well, using Tesla as an example, it's the most reliable car that we have there.
In the EV market?
No, in the entire market.
Okay.
Mainly because it has the fewest number of moving parts. So the number of parts that you have to replace in a Tesla are significantly lower. So it makes it a superior product compared to other cars, including the internal combustion engine cars. So I believe a car is not just reliability, it's also a culture that you will find certain sections of a particular economy mainly using a certain model of vehicle. For instance, in Kenya, we have the matatu sector that is mainly using either Toyota or Nissan trucks. So it's a culture. They have adopted that as part of their business model. They have built strong relationships with the suppliers. They get good prices. There are people who do validation on those cars once they're imported until they fit the right product that is adopted here in Kenya. So trying to convince these guys to now move to a new supplier, you'd have to implement out of changes. And this would include, as I mentioned, things like charging infrastructure. You'd have to show them an advantage. Maybe insurance companies would have to come with a new product that maybe has lower premiums on insuring the EVs in Kenya. So you find that there's a lot of headwinds that you have to go through in order to implement this fully. So for instance, look at import prices. If you could get, let's say, a tax incentive, let's say from various countries, let's say around Africa, then they would probably go for those electric vehicles. But then once you get an electric vehicle in Kenya, you face the challenges of the garage, like where do you get your repairs from? Do you have experts who are able to repair that vehicle around here? How do you source your parts and so on? So until you face all those challenges, then full EV adoption becomes quite a difficult task.
So it is more or less like a luxury
Yes.
utility, luxury acquisition,
Yes.
and less about day to day.
Exactly.
Yeah, but
So that makes it a secondary car. That's why you find that a lot of people who are buying the EVs, it's not their main car.
okay,
If you have a normal ICE vehicle, be it a Subaru, Toyota, a Nissan, a Ford, you realize that there's existing infrastructure to give you the necessary support. So you're able to rely on that car. So if you're buying it for your family or for your business, you know exactly how to handle any kind of problems that may arise.
interesting. I was looking at the chart of lithium ETFs. I think just to look at, because that is one of the main components of making the batteries.
Yeah.
And at some point, I think towards the end of last year, it was really dropping. Production numbers were going down. If you look at their quarterly reports, they were one of the worst performing stocks, at least 2023. And I think this year we have had the price of crude oil playing between 70 to 77, not really going up, and maybe consumers are feeling okay with inflation going down. Maybe I can now go and rev that engine, that ICE engine properly. Is this some of the reason why, let's say, and also commercial sense of it all? Because most businesses are responsible to their shareholders and less to, I would say, human or moral cost that we need to protect the environment. Are these in conflict in such a way that if you're investing, maybe trying to look at the human side is very important, but at the end of the day, to a larger degree, you must deliver yourself a good return. That conflict between, moral and human way of dealing with your investment class, or, purely commercial aspect.
Well, I would say that the guys who are pushing for that ESG form of investing, they really pushed across various international markets, where every listed company had to provide some form of ESG rating, showing how their carbon footprint is doing, the amount of money they are investing to clean the environment or make the environment a better place. So that created a whole new form of, I would say, investing legion that was directing funds to companies that seemed green. But then, after some time, people started realizing that this is not really working. Like, if you're a hedge fund manager, you won't tell them that you didn't invest in Occidental Petroleum in 2020 and 2021, and you went for a solar company that made you 2%, or the other company made 150, 200%.
Yeah.
So that doesn't work well for you as a hedge fund manager. Okay. So if you invest the first time and you get your fingers burned, then you learn your lesson and you start now focusing on investments that really give you good returns. So we have seen it with major investment banks in the US investing in oil companies, gas companies, exploration companies, and as a result, people are starting to say that this was a facade. At the end of the day, people are interested in getting returns, not driving what other companies do in their private business.
Interesting. I think in the world, if you look at the car manufacturing sector, I think you'll notice most of the companies at some point in their lifetime, they have gone bankrupt. I think if you look at, was it Volkswagen acquired, was it Jaguar, not Jaguar. I think there has been a lot of acquisition, for example, right? And Toyota, I think, acquired Subaru. And I think they acquired, I'm not quite sure of the acquisition criteria because they move in and out. I think Tata Motors acquired Jaguar.
I think the most recent one was Stellantis, which was basically a combination of Peugeot and Fiat Chrysler.
They merged.
They merged and formed Stellantis.
Excellent. And few companies have literally survived throughout the years. I think Ford has never gone bankrupt.
Yeah.
Toyota as well.
Yeah.
I think maybe not Tata Motors, if we put it like that.
Yeah.
And if I look at the chart of Rivian Motors, for example, Rivian, the biggest competitor to Tesla, at least from the US side, that company, I think, since the start of the year, at least since January, when it was trading at around $24 a share, it has literally dropped to sub 10 level as of around Monday.
Yeah.
Almost $10 wiped off. And if I try to look at the all-time price movements, it signifies investors are not really confident about it, meaning there is not much demand maybe to give it the shareholder capital, just to give it return. While if you look at BYD from the other side of China, it seems to be doing pretty well.
Well, it's not doing well. It's down 2.39% year to date.
Which is not bad. The year is just 2 months in.
I remember in January I wrote an article on Business Daily comparing between the EV outlook and the ICE outlook.
Yeah.
So what I saw was that there's out of dominance by the ICE cars compared to EVs. So since then, what we have observed is that Tesla price has already gone down. It's down 19% year to date. And when you compare that with the biggest ICE maker, Toyota, it's up 35% year to date. So, well, we had that massive phase, especially between 2019. I'll say push it back to 2015. I remember when Cathy Wood made a big bet on Tesla.
Yeah.
Through to last year. EVs had a really awesome growth. And I still believe they have a strong potential for growth.
Yeah.
Yeah, but the slow businesses, they have also scaled up. And the way they have scaled is by providing this alternative where if you are a Toyota consumer, you're able to switch to one of their hybrid cars.
Yeah.
So with hybrid, it allows you exposure to some form of EV feature where, let's say you have a charging car, but you can still use fuel.
I think that's how human reacts to change.
Yeah.
We do not tomorrow it's all black after having grown white for 10 years or 20 years.
Yeah.
You like a gradual adaptation, familiarization, and even those who will be servicing the car to understand, okay, typically you would go to a mechanic, they'll just use their hands. But you see with EV, especially dealing with the batteries and lithium, there's usually that risk of biohazard. You have seen pictures of people having hands which are burnt and those damages, which is, I think, a reason why I want to believe that EV is good for the future, but in terms of investment grade or investment case, the most investors would say to be, underweight. If you have a portfolio of, let's say, $100,000, you are in there maybe on a small scale basis, just trying to get in to understand how they work and monitoring it from our side. Not even from a commercial consumer point of view, but purely commercial side, whereby with time, definitely maybe the resources required will definitely have an easy supply chain. Number two, because they need and use most rare earth metals, supply where they come from typically have conflicts, unfortunately. So we have maybe some degree of agreement. Okay, this will be the cost of supply. This will be the tariffs in terms of volumes supplied to you. And more importantly, the overall cost of producing just one car makes sense. Not that they just make one luxury vehicle. At least they make it, for all sorts of consumers.
Well, what we have seen is that China dominates about 90% of rare earth metals supply chain.
Yeah.
So if you really want to go full EV, you have to at least find a way of manufacturing that vehicle in China or securing some form of supply chain from China.
Okay.
So that's quite a problem for companies in the West.
Interesting.
So this explains why we are seeing the rise of Chinese EVs, like companies producing an EV at cost of what? They are selling their cars from $10,000 to $20,000.
Yeah, so it means they're doing it maybe at around $7,000, $8,000 thereabout.
So that's BYD. We also have other companies like Neo. We have Li Auto. We have Xpeng. So all of them, they have like really strong dominance in terms of supply chains.
Okay.
Tesla is already exposed to those supply chain disruptions, especially when you consider last year the Giga Berlin had like a 2-week halt in production. Right now, we know the challenges happening with the Red Sea. So a lot of the shipments that were passing through the Red Sea are now having to go around Africa, and that contributes to the supply chain problem.
Interesting.
Then 2021, 2022, they were faced with a semiconductor chips shortage.
And they need a lot of it.
Yes. Okay. So anyone who finds semiconductors, they are basically stockpiling. And that may explain the hurry in NVIDIA.
Okay.
As well as other chips companies.
Interesting that you mentioned. I think there are two things I'd like to pick your brain on. Yeah. We have seen talks whereby, I think, is it Tesla executives or a SpaceX executive or whichever company, Musk is the CEO, saying that he applies and uses a lot of drugs and substance. That sometimes maybe he loses focus on what company to actually focus on. But that is just it's an issue of concern, of course, to investors. But definitely, I think where the company has grown, it has become less of Musk to more of Tesla itself. Okay, what are you doing as a company to ensure you not only deliver value to consumers, but also to shareholders as well, or investors. And then there is the issue of EU regulation, whereby they want, the EU is an area where there is significant regulation to protect consumer, if you put it like that. Sometimes it stifles innovation, but for them, I think they are looking to make sure that every consumer gets their fair share. Whether you find it punitive, it is up to you. Are those critical fundamentals to watch out for, at least in the coming years?
EU regulations,
or even in the development of EVs.
EU regulations are like really bad. They are good for their consumers, bad for their manufacturers. So they literally have been clamping down on their own companies. And that may explain why we don't have any, in the IT sector, we don't have any major companies that have grown dominant since the 2000s. If you really look at it.
Since the age of Siemens and Sagem.
So think about it this way. From 2000s, this is when we had the rise of Google, the rise of Facebook, the rise of Apple, the rise of Microsoft, Amazon, and so on. So all those companies have dominated almost every other sector of the economy, including Visa, MasterCard, PayPal. So from financial structure to cloud computing to EVs and so on, all US. If you compare this with China, for every tech that the US has implemented, China has their own version, which is quite dominant. So if it's Facebook, they have their own social media app. If it's WhatsApp, they have their own mobile messaging app.
WeChat.
If it's PayPal, they have their own. If it's Tesla, they have their own BYD. Like, China is marching. But if you look at Europe, they are all dependent on American infrastructure. So that has really worked bad for them, and it's as a result of the policies they have been implementing.
And I think the reason I'm mentioning them is because if something works in EU, definitely it has the potential to now trickle down to sort of other economies. Unfortunately, that is usually the case because some of their countries are, I think, right driving.
So what we are seeing right now is the UK going into a slight technical recession. Germany in a fully blown recession. Potentially France getting there. So when you see these economies going into a recession, it means that their manufacturing is going down. And what happens when manufacturing goes down? It's mainly because of the conditions within that economy, which may include things like financing, energy costs, labor costs, and so on. So companies tend to move away from that environment to go to an environment where it's cheaper to produce. So it's literally the deindustrialization of Europe. And from what we saw last year, the Chinese EV companies are striking deals with the EU countries to be able to export their EV cars to Europe.
So that will at least allow, if they have agreement on that, I think if they struck a chord on, especially on regulation, perhaps the standard of charging across EU, I think that can be a good thing for EU. At least maybe they might reduce their over-reliance on maybe, other sources of energy.
No, EU majorly produces ICE cars compared to electric cars.
Yeah.
So now they implement these climate change policies where they raise taxes on anyone that is producing or even using an ICE car.
Yeah.
Then they lower taxes for anyone who is importing, selling, or using an EV car. Since they don't have sufficient supply, they are not producing as many cars, then it creates a gap that China is looking to fill in. The US, Tesla is also looking to fill in. But then the Chinese models are much, much cheaper. So the only challenge China has right now is the antitrust investigation being run by the EU to try and understand whether these companies in China are producing at lower cost because they are being supported by government, or whether it's because of their dominance in the supply chain.
Okay.
But then it's basically an open market for other external forces, like companies producing EVs in Japan, South Korea, China, US, are all looking to sell in Europe, but nobody is looking to produce in Europe.
Interesting. I think for me, what I've been following at least since around mid last year was the lithium stocks. So they try to identify the lithium miners, mining companies, rare earth mining companies, and ETFs along that sector will be, for me, one to look out for this year. If they had such a decline and the value of the company historically is good, they have the moat, they have at least in terms of, because I believe they do depend on a lot on crude oil prices. If that goes down to a level where it allows them to produce at an optimum level, I think that is where I'd focus on. And definitely, if that performs well, not only just for the sake of EVs, but obviously for other sectors of the economy, then I think, for me, in that EV sector, indirect, trying to venture into that is a more, I don't want to say safe, but logical bet for the moment. A logical bet for me for the moment.
Speaking of crude oil, both cars are exposed to the price of crude oil.
Yes.
So for you to manufacture an EV, there's you need a lot of minerals, including rare earth metals, which consume a lot of energy. And the majority of these miners use crude oil as a key source of energy, which has a direct impact on prices. If you look at the energy production and distribution around the world, most of it is basically coming from solar panels, which also require rare earth metals, and those rare earth minerals are basically mined using fossil fuels. So crude oil is like this one thing that won't go away. You can shift it from the consumer, like as a consumer you stop using crude oil for your car and you go for electricity, but the tools you will need, the windmills, the solar panels, the electric cars, they all use a lot of crude oil to get to that state.
Interesting. I guess we will be placed that if crude oil is maintaining at below $80 a barrel and they're steadily trading around that level, well, that's a good thing to everyone.
Well, the outlook is not so rosy.
Okay.
What I'm looking at is the US looking to fill its strategic oil reserves. That literally creates a much higher demand. We saw China, the world's biggest importer of oil, basically cutting interest rates and adding more stimulus to the economy to support production. And if the Chinese economy picks up and starts going higher in terms of manufacturing output, then that literally means higher demand for oil and higher prices.
Okay.
So though there is balancing figure, like
more production is also, because I know we have been having a cut in production. So even if they demand, we might have that resultant effect of the OPEC countries as well, maybe in raising their production quotas.
The OPEC countries have been losing market share to the US. They have been cutting production to try and stimulate prices higher. But anytime they cut, the US just comes in and fills the gap with more supply. So OPEC countries haven't been very effective at maintaining high prices. But then, I think the key concern here is the economies that are going into recession.
Okay.
So looking at Japan, Germany, France, if that trend continues, then it means that with economies in recession, their manufacturing production is down, which basically means lower demand for oil, which tends to be suppressing the oil prices.
And it is not a permanent situation, definitely maybe a quarter or two before now things sort of turn to the brighter side.
Exactly. So by the time you're getting to the end of the year, I think if these central banks lower interest rates to try and support the economy to get out of recession, then as a result, we should be seeing a much higher demand for oil, and perhaps we could even see $100 per barrel by the end of the year.
Hopefully not. We'll see.
It's not like something we are hoping it will happen.
Yes.
But the signs are there.
Definitely. At least I think that marks the end of it. Should you be an investor within the EV market or looking to invest, or within the oil or supporting sectors, feel free to add in or chime in your comment, at least one below the chat. This has been your bullish banter episode at the end of February. Hopefully March, the market will be more active for those who like volatility, or more trendy for swing traders who like a very calm market. Have a wonderful day ahead.